Hello, everyone, and welcome. Thank you very much for joining me. Today, we are going to go through the performance of every single one of my UK holdings. And if we just rewind to a video I did last week, that shows where I am in my £1 million investment account challenge. And what we're going to look at is the UK element of the holdings that go into that £1 million challenge. So stay tuned to see the performance of all of those holdings. And you can see that the UK element is around 43% of the overall portfolio. So let's go with the £1 million challenge UK holdings, which is 43% of the portfolio. Right, so we've got the pie chart, and we'll start with the largest holdings. So the FTSE 100 index tracker, that is broadly where it was last time, and that's up 24%. And the best performer is actually the second biggest holding. So it's great to have one of the large holdings as a top performer in the UK portfolio. And this is a smaller companies fund. That's up 18 percentage points since last month, about 4 weeks. So up 184% on that UK smaller companies fund. So really pleased with that one. Next in, we've got Aviva. That's dropped a few points since last month, but still healthy, up 35%, including dividends in just over a year. And this is very much a long-term hold for me. Next up is another fund, and this is up 5 points since last time at 111%. So we've got a really good performance there on those top four. But the fifth largest holding, which takes us to about half the value of the money, that's in Boohoo, and Boohoo has had, in terms of market price, a bit of a drop in the recent month or so, and I have averaged into that position and reduced my average by something like 50p in the overall position. So that's why it's now a much larger holding than it was before. But what that should give me is a good launch pad going forward. FTSE 250, that's up 5 points in the last month, so we're pretty much at 50% on that one. And then we're on to one of my favourite sort of micro cap companies, which is K3 Capital Group, the business services. That's actually down a few points since last month, but overall, it bought towards the end of last year. We're up 62% on that one. And again, that is a long-term hold for me. I think that could join the 100% club in due course. Unilever. Now, Unilever's not had a great month in terms of its market performance, down 6 points. We're getting towards that 100%. I've held that share actually for quite a long time, and I think that's still a long-term hold. And although the dividend is something like 3.5% on price, my dividend on cost, from memory, is over 5%. Quite a nice little hold there. And I've got the UK index, which is up 1 point last time, but that segment is much smaller as I've been chipping down that holding because I'm overexposed to, I'll say, UK index. I've used some of that cash, for example, in Boohoo, where I was able to reduce my average cost basis, which then reduces the risk of losing money on that holding and increases the potential future return. And we get to that sort of 9 o'clock position, so 75% of the money, and we are into Shell, which is up a couple of points. I think for that the large chunk of money there, I think that's a decent performance. Lots of green on the board and a couple in the 100% club, which is great to see. And probably a couple more to come in the next year, Unilever and K3. We're now moving to slightly smaller holdings. We've got BT. BT has been the worst performer in this portfolio in the last month, and it's down 17 points. But nevertheless, it's still up 50%. And I really do expect that one to hit the 100% club, but it might well take a couple of years. And my new kind of thought process going forward is actually I've probably got slightly too many holdings in terms of wanting to add more. So actually what I need to do is increase my minimum rate of return. So what I'm now thinking is for new additions to the portfolio, I want that run rate to be 15% a year instead of the previous 10% stretch target. And that is actually therefore doubling in 5 years. Any new positions, companies that I buy in, apply a strict criteria, can it double in the next 2 to 5 years? And 5 years obviously being that 15% run rate. So we're a bit strict to ourselves on that. Right, Legal in General, they released some pretty good results the other day, and they're up 7 points, including dividends since last month, so 35% in about a year. So that's a very handy return, and they pay a nice dividend as on this list, Shell will turn to that, and Aviva pays a very good dividend as well. Another dividend stock, slow growth, Direct Line, good results released within the last week or so. I think their dividend's around 7%, if memory serves. That has improved by 6 percentage points since the last update. So that's moving along nicely. City London Investment Group, another slow growth dividend stock. That's been broadly level in the last month. And another dividend stock, so it's a theme of this UK portfolio in terms of the individual companies, quite a lot of slow growing dividend stocks. British American Tobacco is down 6 points. That's the second red holding. But in the long term, this is going to churn out a huge amount of dividends. And then Investec, so down 3 points. I think that definitely will be hitting the 100% club in the coming 6 to 12 months. Pretty bullish on that one. Undervalued bank. Duke Royalty, so kind of alternative or equity-based financing. That's had a good month. That's up 10 points. We're up 69% on that. They also pay a decent dividend. And Plus 500, another one that pays a decent dividend. That's up 4 points, but that is a touch in the red overall. Not too worried about that one, but I just need to see what happens in the next 6 months. The forecasts there are quite mixed. Yeah, Fevertree down 9 points, but still up 11%. That's been one of the poorer performers in the last month, but you're going to get that in a portfolio with this level of holdings. Hargreaves Lansdown, which is one of the 4 investment platforms I use, but that's where most of the money is. And that's up 2 points. That's back to break even, and their results come out on Monday. So yeah, a day or two after you'll see this video, be really fascinated to see how they've been performing the last few months. Again, they pay a dividend. And then we're into a Marlborough kind of small cap UK companies. That's up 51% overall, 3 since last time. Bought that at the end of last year, so that's a great return at that time. And a little bit of the smaller holdings down, so perhaps more speculative. So Argo Blockchain is kind of a bit of a cryptocurrency hedge, you might call it. That's about level, but that's incredibly volatile in price. It effectively follows what Bitcoin's doing. And then into the laggards at the end in red, so Greatland Gold and a Woodford fund that's in the process of being liquidated. Bit of a disaster. So the UK portfolio then, overall there's a lot of green on there and not much red. In terms of rule 1, don't lose money, I'm pretty satisfied with how I'm applying that to this portfolio. And the 2 biggest red positions, Boohoo and British American Tobacco, I'm absolutely convinced that I won't lose money on those. British American Tobacco with that dividend, and Boohoo I think will continue to improve. Its share price will go up, and they're growing at 30% a year, so the price will follow that in due course. So I think I'm doing pretty well on this one. I'm not losing money, but it is a bit more of an established portfolio. So that's the contribution of the UK portfolio to my £1 million challenge. Next couple of days, you're going to see the Asian portfolio, which is mainly Chinese stocks, and you're going to see the US update as well for those holdings, and those 2 are much newer portfolios, particularly the Chinese one as well. So I'll leave links at the end once those are posted to those videos. You can go in and watch that as a bit of a box set and get the breakdown of the detail in the portfolio. So those are holdings. Thanks for joining me. Your thoughts below, and I'll see you on the next one.